On 80 now, the one theme that's really held out in this market amidst the volatility has been the commodities theme, and three stocks from that sector that have clearly held their own over the last 18 months in the upcycle that we've seen within the commodities universe have been Tata Steel, Vedanta, as well as Hindalco. So we thought, why not on our 9th anniversary touch base with the management of Tata Steel and get a better sense on how things are shaping up, what their business plans are to take advantage of this favorable cycle. Mr. V. Narendran, who's MD and CEO of Tata Steel, joins in to discuss the future prospects of the business. Mr. Narendran, it's great to have you on the show. Thanks very much for joining us on our 9th anniversary. From the entire team at ET Now, we are very happy that you could be part of our programming today.
Thank you. Pleasure to be here, and congratulations on your 9th anniversary.
Great, sir. Give us a broad sense of how you're looking at the industry positioned right now. I mean, we've seen a strong upcycle, not just in the Indian steel market, but globally as well. Prices have been on an uptick. Typically, the commodity business comes in with a multi-year cycle. Where do you think things stand as of now, given the trade war tensions between the US and China that can impact the steel industry globally as well as in India?
Yeah, I think the industry went through a tough time in 2015. This is a cyclical industry, so things go bad once in a while. 2015 was a momentous year for the industry because that's when China slowed down a bit, and the exports from China doubled during the year. So China, which was exporting about 5 million tons a month, went up to 10 million tons of exports, which created a lot of disruption across the world, including in India. But since then, a lot has changed. I think on the supply side, China has acted on many of its inefficient units, as well as the units which were polluting the environment. Not so much because everyone else made noise about Chinese exports, but more because the Chinese government wanted to literally clean up the act and have blue skies, as they say, in the Hebei province, which is where Beijing is, and most of the steel industry is located in the Hebei province. So over the last couple of years, China has taken out a lot of smaller units which are polluting. They've encouraged the bigger ones to move towards the coast if they are expanding. So there's a lot more discipline in the Chinese industry from a supply side. On the demand side, things have not been as bad as one feared at that time. And globally, things have also improved. I think major steel consuming markets like the US, the European Union, Russia, Latin America, and of course India have continued to grow. Southeast Asia is also quite strong, and Middle East and North Africa had slowed down a bit, but now with higher oil prices, they are also looking up. So on the whole, for the first time in maybe 3 or 4 years, the steel industry is seeing growth in almost all major markets across the world, which is reflected in the steel prices as well as the prices of iron ore and coking coal. So we do see a situation where things are much better than it was 2 years back. But I must also say that today's hot rolled coil price of around $600 is not unusual at all. If you look at steel prices over the last 10 years, it's probably the long-term average in the last 10 years. And what we saw in 2015 in some sense was probably something which was quite unique and quite rare, I would say. So we expect this level of international pricing to continue. What's happening in the US now with Trump taking action is that the domestic prices in the US have gone up. It is in some sense in the $800 to $900 range, in fact in excess of $900 if you look at the hot rolled coil price. So what it has done is increase the prices, domestic prices in the US, which is good for the domestic producers in the US. But for many people who are exporting into the US, now you can sell in the US market at those prices, because that's 25% more than the prices in the rest of the world. And so if you were an exporter in the US, in some sense, your realizations are protected, and in some sense, the US customer is the one who's paying you the price.
Mr. Narendran, afternoon. You've rightly highlighted what the landscape is for Indian steel players. But, if you look at a comparative analysis, one realizes that steel companies in India have managed to post a higher EBITDA margin than their global peers. What, according to you, gives Indian steel players a global edge in that sense and manage to outdo their global peers?
So firstly, many of the Indian steel producers, including us and many of our peers, have built new capacities over the last 10-15 years, which are world-class in terms of capabilities and also in terms of efficiencies. So anybody building a new steel plant has an advantage over somebody running a steel plant which is 20 years old or 30 years old. So to that extent, the Indian steel producers inherently have better facilities than most other countries, apart from maybe China, who's also built a lot of capacity over the last 10-15 years. So we are more energy efficient, our manpower productivity is better, water consumption is lower, our CO2 emissions are lower, so on and so forth. So that is one. Secondly, India is blessed with having some raw materials, particularly iron ore, and that is available locally. So even if you're not a captive producer like Tata Steel or SAIL is having the raw materials that you want, but you can also buy locally, and if you can buy locally, you are saving on, for instance, inventory, you're saving on exchange rate fluctuations and so on and so forth. So the Indian players have an advantage of locally available iron ore. All of us import coking coal, and that adds to the bill. And the fact that the Indian economy is one of the fastest growing economies certainly helps. And the steel intensity in India of GDP growth is still not as much as it could be, because very often in developing countries, you would expect the steel consumption growth to at least match the GDP growth rate, whereas in India for the last few years, we've been at less than the GDP growth rate. So all these creates conditions where the Indian steel producers are well positioned, competitive, in a growing market where the demand is growing, in a quality conscious market, because we have the best of the automobile companies here in India demanding the best quality of steel. So I do believe that we have some advantages which some of our peers in the other countries don't have, and obviously we are making good use of those advantages.
You certainly are, Mr. Narendran. A new concern for steelmakers, of course, is the higher pricing for iron ore and also its lack of availability. Now, Tata Steel has a more integrated model, and that the market is well versed with, and which is why it also commands a premium compared to other steel players in India. But do you think that's a worry for you?
I think iron ore, there is iron ore in India. The iron ore mining industry had a setback, including us, a few years back. Things are coming back into a normal situation now. But having said that, I think there's a lot more that can be done to fully leverage the fact that we have a lot of iron ore. I think whether in terms of prospecting, whether in terms of mining, there's a lot that can be done. There's a lot we should do to attract more investments into the sector. India is one of the highest tax countries from a mining point of view. So if you look at the kind of effective tax rate on what we mine, it's very high. And it's in some sense outcome of the fairly high commodity prices that we've seen in most of the last 10-15 years. So the governments also see an opportunity to get more revenue from this industry. But I believe if you overtax this industry, you will not get the investments that are required to grow this industry. India is one of those few countries which has both the raw materials and the markets, and so we should fully exploit that. So I do believe that we need to take some action on the supply side in mining to help the mining industry grow, invite more investments in mining, look at the effective tax rate for mining, and then more importantly, and which is hurting us even more these days, is managing the logistics, because while the railways have planned a lot of investments, I think we are struggling to catch up with the needs of the economy. So all of us, whether you're a mining company or a steel company today, are struggling because we are not able to move materials when we want them to. The railways have taken some steps. We had the SFTO scheme for the finished products, and now they have the Own Your Wagon scheme for the raw materials. So all this helps, but I do believe that getting more investments into mining, expanding the mining activity in the country, doing it the right way, making sure that we don't create problems for the communities who are impacted by it, and taking care of logistics is very, very important for us to realize the potential that there is.
Mr. Narendran, just taking a leaf from what you were earlier mentioning on US's trades policy, how much of a worry could this turn out or spell out to be for your European operations?
Yeah. So we export about 700,000-800,000 tons of steel from Tata Steel Europe to the US. More than half of it is specialized products which are not easily made in the US. So we've spoken to the customers there. They are obviously willing to pay us the higher price that covers this import duty, because otherwise they don't have a choice to source locally. So at least half of what we export into the US in some sense is covered by the support of our customers. The rest we are discussing with the customers. They do have local options, but like I said, the prices in the US are also quite high. We have relationships which we will certainly leverage. Otherwise, we will look at alternate markets. So from a direct impact point of view, I think it's manageable. There are some challenges, but we'll manage them. What I think the steel industry in Europe is more concerned about is, will material which was headed for the US get diverted into Europe? And that can have an indirect impact of President Trump's actions. So, but the European Union, the governments there have, the EU has basically said that they will take care of that. They will look at that interest, because they don't want the redirection of material headed to the US to come to the European Union and disrupt the industry there.
Okay, so tell me, what percentage of your exports would be disrupted if indeed there are some trade repercussions for EU coming out of the US?
So basically, like I said, we export about 700,000 tons, which is about 7% of what we produce. Half of it is not impacted because we've already negotiated with the customers. So hardly 3% of our output is impacted by the actions being taken now. So finding alternate markets for 3% of what we produce in Europe is not such a difficult task, particularly in the current market conditions when things are quite benign.
Mr. Narendran, you know, your investors would be intrigued to know a little bit more about, now that you've taken over the Bushan Steel facility, how do you plan to turn it around? What's the timeline for the same? When will the integration be complete? And is this the way forward? Because there are a lot of such entities, debt-laden companies, troubled assets, which are now coming under the purview of the NCLT. Would you be interested in more such assets in the future?
Well, Bushan Steel has been a good story so far for us. We were very keen on this asset because we felt it was the best asset on the block, and we worked on it, we got it, we moved in, we've integrated it quite well in the last 3 weeks. Our teams are there. The employees in these, in Bushan Steel, in the multiple units of Bushan Steel, have also been very supportive. We've already identified a lot of areas to work on, and I think so far so good. We're working together, you know, across multiple functions, whether it's procurement, whether it's operations, whether it's marketing and sales. And many of the assets in Bushan Steel are similar to the ones we run already, whether it's the blast furnaces or the hot strip mill. So we are very familiar with it. We know how to run them well, and the local teams are available as well, who are very committed and excited about the new team which has moved in. So, so far it's been good. The markets have also been strong. For Tata Steel, the most important thing is we have equity in the marketplace with the customers. We have relationships which we would have struggled to service over the next 3-4 years, because we did not have any significant volume addition till the Kalinganagar phase 2 got completed. So Bushan Steel helps us bring more steel to the table for the next 2-3 years. Last year, the Bushan Steel plant operated at 3.5 million. We should finish this year certainly above 4. The aim is to take it to 5.5 as soon as possible, maybe in the next couple of years, and that's what the team is focused on. So I think there are a lot of areas we can work together. Bushan Steel can plug into the overall procurement activity of Tata Steel, because we are a big buyer of coking coal globally, and we can very easily support Bushan Steel with the coal supplies. Our freighting is done very differently. We do a lot of long-term contracts. We can leverage that. Operationally, there are many areas which we've identified. In the marketplace, there's a lot that we can do together. So the teams are working quite well together, and I'm quite positive, and the experience so far has been great.
Troop shareholders have now joined the workers' unions in refuting the Tata Steel deal. And if I'm getting this correctly, their claim is that they're not really getting a fair due for the better valuations they have versus Tata Steel EU. How is it that you would refute their claims?
Well, these are discussions that are going on. There's a new shareholder who has come into ThyssenKrupp who's asked a few questions. When we look at valuation, we look at the long-term valuation. I think, yes, we've had a couple of challenging quarters in Tata Steel Europe, but some of it was planned because the performance was also impacted by the shutdowns that we took. We are making significant investments, or we have been making significant investments in Tata Steel Netherlands to upgrade the facilities, and some of these shutdowns were planned, and obviously that resulted in a loss of production, which made our numbers look worse than they needed to be. So we had a bad October-December quarter, a better quarter in Jan-March. It looks even worse simply because the markets have been good, and so our peers had moved ahead because of the fact that they had the plants running full out, where we had some shutdowns, and the impact of that was felt. So to some extent, when you look at the valuation of companies, you would look at it over a longer period of time rather than 1 or 2 quarters. So that's the conversation we're having. We understand where they're coming from. It's our duty to explain to everyone where we stand, and there are discussions going on between the multiple stakeholders who are involved, and we are confident that we'll find a solution sooner than later.
So Narendra, this is Siddharth joining in conversation. First of all, thank you for joining us and sharing your thoughts on your company. I'm going back to that tariff war question which or implication of that which Aisha, my colleague, asked you. But this is more generic. As an industry expert, I would like to seek your opinion. Now, this is general belief in market that this tariff war between US and China, Europe would end up suffering the most, and you did touch upon some of the aspects related to your company. But do you see that this small war which has just started, the quantum of tariffs imposed are not very high at this point of time, but do you see cascading impact happening on European region because of this?
Not so much. If you really look at what does the US import, it imports about 30 million tons of steel, and most of it comes in through Canada and Mexico. So they are going to be the countries most impacted by the actions. Like I said, the direct impact of for Europe is not so significant. US is an important market. US is a large market, but a lot of steel exported from Europe, not only from Tata Steel, but even if you look at ThyssenKrupp, is tin plate. It is steel for packaging, and which is not made much in the US. So to that extent, the direct impact on Europe is less. Indirect impact is what one watches out for. But the EU has already said that they will also take action to protect their industry, because nobody wants a lot of steel coming their way. The countries who are in some sense a bit more concerned are countries like Turkey, who sell a lot into the US, and Turkey is an exporting nation and so is looking for alternate markets, and Europe is nearby. But I do believe with the oil prices where they are, the Middle East and North Africa is also picking up in terms of consumption. If you look at China, Japan, Korea, all of them export a lot also into Southeast Asia, which is doing quite okay. So I think what one needs to watch out for, honestly, is not so much on steel. I would be very watchful on what's happening in the auto industry, because Japan exports a lot of cars into the US. I think 25% of what they produce is sold in the US. If there are actions on Japanese cars going into the US, that can impact the Japanese steel industry in Japan. And similarly, if there is an action against European car manufacturers selling into the US, that can have an impact on the auto industry in Europe. So I would watch for these kind of actions. I think the actions on steel, maybe at this point in time, because of the fact that globally all markets are growing. China itself is reducing its exports from, this year it should end up at 5 million tons a month, which is about 50-60 million tons. So the world is not awash with a lot of extra steel. So I do believe that in steel we'll find alternate destinations. And the other thing which has happened is the steel prices in US have gone up as a consequence. So many are finding it, despite the duty, finding it helpful to sell in the US, because if the hot rolled coil price in US is $900 and internationally it is $600, you covered your 25% duty anyways. So this is what has happened. So I do believe for the steel industry, it is an inconvenience, but I don't think it's a crisis.
Mr. Narendran, I know we've really extended our appointment with you, but I can't help but ask you about this in Group and Tata Steel EU. What could be the next possible procedure? Do you think the timeline for this joint venture and a closure to the deal be extended, A? And is there a possibility, because of now this new angle of the shareholders joining hands with the trade unions, is it possible that there could be a change of deal which could be in the pipeline that you may be working on?
So I think it's premature to assume the new shareholders and the unions have joined hands. Everyone has a view and they voice their view. I think there are multiple conversations going on with multiple stakeholders. At a very fundamental level, everyone is supportive of the deal. I don't think anyone wants the deal to fall through, because it's very important in Europe to consolidate. And given all these trade actions,